Hi everybody, this is Rich-Soto with Selling LA South Bay at Keller Williams here in Los Angeles Harbor, and I'm here with our lender Paul Helmy from Primus Lending.
Hello everybody.
So we have some questions for our lender today because there's so many changes in the market that are happening, and with the new year upon us, some of the people that have been waiting, not sure what they should do, we have some questions for our great lender who has a lot of good answers for you. So I just want to dive right in with you, Paul.
Absolutely.
Okay, so one of my questions is, has the recent uptick in mortgage rates affected buyers who are currently out in the market shopping for a home?
I think it's had a couple things that have happened. People have decided to either wait for interest rates to drop down, and with that being said, they've lost out on those historically low interest rates that we actually had a few years ago. And as they continue to tick up, what happens is clients who maybe qualified for a $400,000 home and had a debt-to-income ratio almost at a max, when that home value goes up and interest rates go up, you no longer qualify for that because you were already on the cusp of not qualifying. And what that does is it then kicks you out of the home price value or the home that you perfectly wanted, which then forces you to either have to go down, you're going to settle for a home, or you're not going to be able to purchase something at all. And then what we're having now and what we're seeing is clients waiting for interest rates to dip, which they have in recent weeks just a tad with the way the market has shifted. However, they're not going to tick back down to when we saw the 3%, 2.75 out there. We're still historically very low compared to what America has offered in past years.
Right.
So it's still a great time to actually get out there, purchase, and if you qualify for something, you're not going to find that perfect home. So with those interest rates continuing to rise and home values continuing to rise, you're going to lose out on an opportunity to become a homeowner.
I agree. Okay, very good. So if buyers continue to sit on the fence, then they will be negatively impacted in the future. So that's
Absolutely.
what we just talked about. And you said Google is not your friend, and
Absolutely.
I totally agree. Talking to family members, people that have bought in the past and things like that. In my lifetime, I've bought and sold several properties, and it's always a different market. It's always different lending guidelines, different interest rates, different everything. Things change. So you can't go by something that happened 10 years ago or even 5 years ago because it's completely different. Your lending guidelines change,
Absolutely.
right?
Absolutely.
So I hear this all the time. I mean, everybody's afraid. They go, I need your real honest opinion. Do you think the housing market's going to collapse? I'd like to get your opinion on what you think about that.
I don't see it collapsing, and that's my opinion, and for the following reasons. Number one, last time the crash happened, we had overextended lending.
Correct.
So we had people taking out non-traditional financing with zero money out of pocket, one. Number two, we also had a lot of fraudulent loans going out. Meaning, and this is something that I actually saw, someone who was not alive but had a mortgage out in their name. These are things that we as lenders and good lenders now have systems in place that the government has set. And yes, some may say they're a little stringent, but it's better to be stringent and not have another crash than let everything fly by, and then you have people who are lending $500,000 mortgages with zero money out of pocket. How does that make sense?
It doesn't.
And what I like to say, if you don't have skin in the game, then what makes you not be willing to walk away?
Yeah, there's no commitment.
Absolutely. And so, yes, there are non-traditional financing programs that are out there, zero out of pocket, or you have your P&L programs are fully stated, but those now require you to put 25 to 30% down.
Yeah.
Whereas in the past, it was zero money out of pocket.
Yep.
And if you are talking to a business owner and they're given the chance to save their business, which provides steady income, or save a home that they only put 0 to 5% down on, which one are they going to give up? They're not going to give up their business because that's going to allow them to purchase another home in the future.
Later.
So they will walk away from their home.
That's
so
nice.
I don't see a crash happening because we don't have those same guidelines as we did.
100% agree. Predatory lending killed the market back in 2006 through 2008, and then we had to rebuild from there. We're never going to see that happen again because the government obviously stepped in. Government had to really help themselves out there, and a lot of the big banks. So we're not going to see a repeat of that. My next question for you is, I feel this, after 18 years, I've seen all kinds of different cycles, different markets. Do you feel, based on agents you work with, that there's a shift in the market to a buyer's favor.
Absolutely,
Okay.
absolutely, and a few things that point that out. We're now starting to see homes sit on the market for an extended period of time.
Mm-hmm.
We are now seeing people who are going into contract require that they have an appraisal. There are no more removal of appraisal contingencies.
Correct.
This is take it as it is, no
Mm-hmm.
appraisal needed.
Right.
So with that being said, it is now shifting back to a buyer's market, and the longer that these homes sit, with sellers, I understand it's kind of a touchy subject because they want to be stubborn, they want to get the best dollar, but if it's sitting for 3 extra months because you wanted to have an extra $15,000, but your mortgage payment is maybe $4,800 and you've sat it for 3 months,
Mm-hmm.
you've then lost your profit, and not only that, you've risked losing out on potential buyers. So
Yeah.
sellers, for me, need to really take a professional's actual advice and
Yeah.
and let the professional who's done this for years actually guide you to the right price point. And if you get multiple offers, then you can actually start.
Fantastic.
Exactly. And then you get to choose.
Right.
And you can give the option of somebody maybe then will be willing to bring in more money.
Mm-hmm.
And then you get what you wanted
in the
essentially.
first place, yeah.
Exactly. But right now it is definitely a buyer's market.
Mm-hmm.
Interest rates, like we said earlier, are historically low. And with what has happened in the past 3 weeks, they have gone down a little bit. Is that going to change? Yeah, because the Fed has already said that there is going to be 3 rate hikes in this year.
Mm-hmm.
They just said they're going to postpone them. So this is exactly the perfect time to get in the market
Mm-hmm.
if you're a buyer.
Right. Okay. I couldn't agree more. All right. So finally, I wanted to find out, and I think you know, you're like this
Yes.
expert. Aren't there down payment assistance programs where people could get into a home for as low as 1% down if they are cash challenged, but they have good work history and their credit is decent?
Absolutely,
Okay.
absolutely. So the good thing about these down payment assistance programs, you do have to go to some type of counseling for them.
Mhm.
Number one, you do have certain restrictions for them, but for that client who is, doesn't have that cash flow just sitting there, how many people have $40,000-$50,000 sitting in the bank?
Mhm.
Not a lot of people.
Not a lot of people.
And if you do, are you going to just put everything into a home? How are you going to then provide for your family? And what happens on a rainy day? And then we get back to the crash all over again.
Correct.
So,
Yes.
yes, there are programs that allow you to.
Mm-hmm.
It is good to be knowledgeable of those programs. And if they actually apply to you, it's definitely good to take advantage of them. There's also other options, what we prefer to do. If you don't qualify for those, we're willing to step in and help out with closing costs.
Mm-hmm.
And so if you have your down payment,
Mm-hmm.
or if you're able to get gift funds or so forth, and we can think outside of the box, but we can make sure that it fits within guidelines,
Mm-hmm.
and we can help you come into a home with as little as 1%, maybe even less in certain circumstances. If your credit is strong enough
Mm-hmm.
and you've shown that you haven't defaulted on loans and you've been a good, perfect client, or
Mhm.
somebody who's made a turn and is doing good,
Mm-hmm.
there are programs that can definitely assist clients in that sense.
Okay, and I think that this is a question on everybody's mind. So if they're a first-time home buyer, they're trying to get in, maybe they don't have a lot of cash, but they have some, and they have stable income.
Yeah.
What's the lowest FICO score that you can work with?
Here's the best part. So if you don't, it's a 2-part question.
Okay.
We're one of very few lenders that actually go down as low as 520 on FICO scores. However, your debt to income ratio then becomes much lower because, again, we are all about limiting risk,
Sure.
not only for ourselves, our investors, but the
The
clients,
client, yeah.
mainly. And what a lot of clients don't understand, we're actually protecting you. We don't
Right.
want you to overextend yourself. So you can go down as 520, but you will have to come in with 10%. It becomes a manual underwrite.
Mm-hmm.
But if you're looking at a 600, 620 FICO score,
Mm-hmm.
you're still able to come in with 3 to 5%. And if you are 640 and above, then those programs do qualify, the 1% out of pocket.
Mm-hmm.
It's a 640 FICO. And that's where you want to be. Generally, if it's higher, great.
Great.
But if you're at 640,
that's what
there
you
are
need.
so many programs as long as your work history is strong and you've shown a good credit history. Not everybody has a low FICO because they don't have a strong credit history. It's just sometimes they don't have enough credit history.
Right.
And that's the thing. It's not derogatory credit.
Right.
It's credit history. And those are two different things, and the underwriter differentiates between those two.
Okay. So final question is, how long does somebody have to be on their job or in their line of work for them to qualify? If they've got like that 640,
Mhm.
okay, how many years do they have to be in their line of work in order to get a loan and maybe take advantage of down payment assistance or, you know, help with closing costs?
Then it does require you 2 years
Okay.
of filed tax returns
Okay.
in a W-2 facet or in a 1099 facet, but they do have to be filed tax returns. If you're not going to take advantage of those, then there are programs that allow you to do 1 year of tax returns.
Okay.
And as long as you're continuing in that job field,
Okay.
then yes.
Okay, fantastic.
Absolutely.
Well, thank you for spending time with us today. It was great to see you. Thanks for being on camera with
Absolutely.
me.
Thank you for having me.
Happy New Year. Happy New Year,
Happy New
everybody.
Year, everybody.
Let's get you buying a house.
Absolutely. Thank you.